Welcome for today's webinar, where we'll see together how to protect your family while reducing your tax bill. Let me introduce myself very quickly. My name is Patrick Malje. I'm co-founder of taxx.lu, a website that exists since 2018 that helps everyone to file their taxes in Luxembourg in the most easiest way. All along of the webinar, you will see on the left side of your screen a QR code that you can scan with your phone. And basically, you have access to an online agenda where you can book a free call with our tax optimization experts to have a better knowledge about how to save on taxes in Luxembourg. We have seen we have already done 2 webinars last week. So last Tuesday, it was about tax optimization in more global approach. So this webinar, you can still find it on taxx.lu under webinars. And last Friday, we had another webinar about private pension plans, and that one as well is available as a replay on our website. So a very short introduction about tax optimization, because the other webinars were talking about this more in detail. Basically, what is tax optimization in Luxembourg? On your tax return, on the one hand, you have all your income. For most of you, it will be your salaries. And on the other hand, you have different deductions that you can claim on the tax return. And at the end, the result of this will give you the taxable income. And this taxable income will be used by tax administration to determine how much tax you have to pay. The system is quite easy. The higher your taxable income is, the more taxes you have to pay. So the opposite is true as well. The lower your taxable income, the lower the taxes you have to pay. So basically, when we are talking tax optimization, we are talking about the fact to increase deductions on your tax return so you can lower down your taxable income and by this save on taxes. How much tax could you save? This basically depends mostly on your taxable income, so on your income. Let's have a look at a few examples. If you are a single and getting a gross monthly salary of more or less 3K, then you are at a marginal tax rate of 21%. If you're having a gross monthly salary of 6K, then you are already at around 42%. And if you're having a gross monthly salary of 12K, you are around 44%. This means basically that if this person would deduct 1,000 euros on his tax return, then he would save around 440 euros in taxes. If you want to know exactly how much tax you could save, don't hesitate to book a free call with one of our experts so we can have a look into your situation. What are the deductions that are possible in Luxembourg? So basically, there are 3 different categories. First one is called special expenses, interest on personal loans, insurance premiums, contributions to private pension plans or home savings plans, and also donations. And then we have another category that is called allowances. There you can find basically expenses you have for childcare or domestic help, basically cleaning of your home, and also extraordinary expenses. And another very popular category is about the main residency. So basically, if you have a mortgage, you can deduct the mortgage interests. And also when buying a home, you can deduct different notary fees and bank fees the year you bought basically your house or your apartment. So in the webinar last Tuesday, we had an overlook about all these different deductions. Today, we will have a closer look into the insurance premiums that are deductible. So insurance premiums are in the same category of deductions than the interest on personal loans. So the most common here is a car loan. And here you can deduct the interest for this car loans, but is also for overdraft interest on your bank account, or if you have any interest you are paying on your credit card. Insurance premiums here, it's basically, or the most popular one is liability insurance for your car, for example, but also premiums you are paying into life insurance or private healthcare. For every deduction on the Luxembourg tax return, there are maximum deductible limits. In this category, the maximum deductible limit is 672 euros per household member. A few examples: if you are single, you can deduct 672 euros maximum and save around 280 euros in taxes. If you are a couple without kids, you can deduct a maximum of 1,344 and save around 560 euros in taxes. And if you are a couple with 2 kids, you could deduct a maximum of 2,688 euros and save around 1,100 euros in taxes. So what are the insurances that are deductible? So not every insurance you are paying for is deductible on the tax return. So on the deductible side, we have civil liability insurances, like the most common here, it's for your car. So basically it's the insurance you need to drive a car here in Luxembourg, so the insurance that is mandatory, but also civil liability insurance for your family. In Luxembourg, normally those are included into your housing insurances. So those are deductible here. Other deductibles are, for example, contributions into life insurance, outstanding balance insurance, and private healthcare. So we'll have a closer look to those in a minute. And not deductible is basically insurances that you have for full damage coverage for your car insurance. So basically the insurance that will protect the car itself. That one is not deductible. And the same, your home insurance is not deductible neither. Basically, only the civil liability part of this insurance will be deductible, but not the insurance that covers your home against fire, flooding, and so on. Other insurances that are not deductible is legal protection insurance or pet health insurance, for example, for your dog or for a horse or whatever. So how can you find out what insurances are deductible? But basically, if you are with a Luxembourgish insurance company, it's quite easy, because those insurance companies in Luxembourg, they're providing you a tax certificate where they mention clearly what is deductible. So you don't need to think about it. You basically just download those certificates. They will be online normally end of January, the year after the tax year, on their websites. So their tax, the tax deductions will be clearly mentioned on those certificates. If you are living in the greater region of Luxembourg, so Belgium, Germany, or France, some insurers in those countries are providing tax certificates for the Luxembourg tax return. Like, for example, the Crédit Agricole de Lorraine, a bank and insurer here in France. They are providing those certificates. If your insurance company is not providing insurance tax certificates, ask them, tell them that it's for the Luxembourg tax return, and normally they know what they need to provide. So let's have a closer look into different types of insurances. Life insurance at first. So what is life insurance? Basically, it's an insurance policy that protects your loved ones, so your kids, your partner, against life's unexpected events like death. And in some cases, it allows you as well to build up some savings. So there are two different types of life insurances in Luxembourg. There's one without savings. So basically here, if something would happen to you in the event of a death, your loved ones would receive a lump sum. So they would get money out of this contract. And at the end of such a contract, you won't receive any savings. So there's no capital paid out in case of life. There are other types of contracts, like life insurance with savings. It's kind of the same. In case of death, there will be money paid out to the beneficiaries in case of death. That could be your partner, your children, for example. But if at the end of the contract you are still alive, at that moment there will be also some capital that will be paid out to you. We'll see a few examples in a minute. So I can present one product or one type of contract with a savings at the end of the contract from our partner Lalux. This one is called Easy Life Education. The goal here is basically to build up some savings to fund your children's university, for example, and to provide also an extra coverage in case of death of one or of both of the parents. So basically what you need to know is that for life insurance, in order to deduct it on the tax return, the minimum duration for those contracts have to be 10 years minimum. So here, for example, you would define a monthly payment that you want to invest into this life insurance. You could open up a contract starting with 50 euros a month, 100, 200, you are free to choose the amount you want to invest. Minimum duration is 10 years. If the parents are still alive at the end of the contract, then the child would receive every quarter for 5 years a certain amount of money. The same would be paid out if the two parents or one of the parents would die before at the end of the contract. So the child would receive anyways this amount, and on top of that, it may also receive a lump sum at the moment of death, and this lump sum could be different based on the cause of the death. So have an example. Let's have a look at an example here. A couple, two parents, 30 years old, that opened up such a contract for a duration of 18 years. So could be possible they open it up at the birth of their child, and they want to invest 100 euros per month. In case of life or death, anyways, after 18 years, the child would receive every quarter around 800 euros during 5 years. So in total, the child would receive around 16K out of those payments. And there are additional warranties here. So basically, if one parent would die in a traffic accident, in a car accident, for example, then the child would receive a lump sum of 92,000 euros. And if the two parents would die in this car accident, then the child would receive around 185,000 euros. So in total, over 18 years, this family would invest around 20,600 euros into this life insurance. By deducting it on the tax return, they would save around 9,000 euros in taxes. So at the end, the net investment here would be around 12,600 euros. The child's benefit, anyways, in case of life or death of the parents, the child would receive around 16,000 euros over the 5 years. That could help to finance university, for example. Another type of life insurance is Easy Life Prévoyance. For this one, there's no savings at the end of the contract. So basically, there will be no money at the end of the contract that will be paid out in case of life. However, the coverage in case of death would be much higher. The details, basically, it's the same. You decide the amount you want to invest each month. Minimum duration is 10 years in order to deduct it on the tax return. So in the event of life at maturity, there will be no capital paid out. But in the event of death before maturity, there will be capital paid out. And here as well, we have an example. Here's a single that invested 100 euros per month for 10 years. So in case of life, after those 10 years, there will be no capital paid out. And in case of death, the beneficiary in case of death could be the kids, for example. They would receive a lump sum of 190,000 euros. And there are also additional cover. So basically, if death is due to an accident, the child would receive around 760,000 euros. And if it would be a car accident, the child would receive a lump sum of 1.3 million euros. Total premiums over those 10 years that I invested into this contract would be around 12K. By deducting this on your tax return, you would save around 5,000 euros in taxes over those 10 years. So at the end, the net investment is 7K. And the coverage, worst case scenario, you would die by traffic accident. Your child would receive a lump sum of 1.3 million by investing those 7,000 net into this contract. An outstanding balance insurance, it's basically another type of life insurance. It's linked to a mortgage. So basically, the idea here is that in case of death, this insurance would reimburse your mortgage, or at least part of it. So basically, this can happen in case of death, but also in the event of disability. So if you have an accident and you would be disabled, this insurance could also reimburse on your mortgage. So basically, the goal here is to protect your family. If one of the parents would die, to avoid that the other is not, for the other one, it's not possible to pay back the mortgage, and to avoid that they have to leave their home, this kind of insurance makes absolutely sense to protect your family. And there as well, those insurances are tax deductible. And in Luxembourg, you have two different possibilities to pay for those outstanding balance insurances. You can decide to pay them annually, and then your premiums into this insurance would be part of the maximum ceiling of 672 euros per member in your household. So a couple with two kids, they could deduct the maximum of 2,688 euros per year here. However, in Luxembourg, you also have the possibility to pay those insurances by a one-shot payment, so a single premium that you're paying at the moment when you are signing up for this contract. And here, basically, you can deduct a lot more. If you're paying this insurance by a single premium, you can deduct up to 6,000 euros per adult in your household, plus 1,200 euros per child, and plus 8% per year you are over 30 years old. So there's some calculations to be done. On taxx.lu, we have a simulator that you can use for free if you want to check how, what is the maximum deductible limit for single premium in your personal situation. As an example here, father 40 years, mother 38, and 2 kids, they could deduct a maximum of almost 25K on their tax return if they decide to pay for this outstanding balance insurance in one shot. So let's assume they would open up such a contract and invest 25,000 euros into this life insurance. The tax gain by deducting would be around 10,000 euros. So at the end, the net price for this insurance would only be 14,500 euros. Good to know is that this increased ceilings are available every 5 years. So it could be possible that you are buying a home today and you are just covering half of your mortgage. And then in 5-6 years, you're opening up a second outstanding balance insurance, and then you can again get this maximum deductible limits applied if you're paying this insurance for by a single premium, basically. Another insurance that is fully deductible on the tax return is the private healthcare. So private healthcare, in Luxembourg, we have quite a good public healthcare system, but it does not reimburse 100% of all your medical treatments. So basically here, a private healthcare insurance, it covers or it completes the public healthcare system. Most of you are probably with CNS, so the public healthcare system. So this insurance would reimburse you if CNS is not reimbursing 100%, or this private healthcare insurance would also cover treatments that are not reimbursed at all by CNS. And there are other special coverages that are included into those insurances. We will have a look at the product Easy Health from DKV Luxembourg. DKV Luxembourg is part of the group Lalux. It's one of the biggest private healthcare insurances in Luxembourg. And so they have different coverages with this package Easy Health. So for example, you have coverages regarding first-class hospital stays and medical appointments you have with your doctors that are not fully reimbursed by CNS. You have glasses, contact lenses that are also reimbursed, dental treatment, physiotherapy, osteopathy, up to 1,000 euros per year, and much more. There are also 2 additional coverages included in Easy Health that are quite interesting. The first one is called Best Care Plus. Basically, it gives you immediate assistance if there's a doubt about a serious illness, like for example, a brain tumor. They will get you an appointment with a specialist within 5 working days, because basically if there's a doubt about some serious illness, time is important. So they are getting you an appointment within 5 days. And another option that is included in Easy Health is Travel Plus. And here basically it's a private healthcare insurance for when you are traveling. So if you would have an accident or some medical issues, the treatment costs abroad would be covered, and as well if you need an ambulance to come back to Luxembourg, that one would also be included in this insurance. A few examples: physiotherapists. So basically, Luxembourg CNS is reimbursing those, but they are not reimbursing 100%. DKV would reimburse you. So for 10 treatment for a physiotherapist, it would be free of charge for you. For glasses, DKV is reimbursing up to 500 euros every 2 years. So there as well, buying new glasses would be without any charge for yourself. Dental treatments, quite expensive. Here for crowns, for example, DKV is reimbursing 600 euros per crown. So in this example, where the person would have 5 crowns to be done, basically at the end, he has only to pay 292 euros on his own. Orthodontic treatment, very common for the children. Those treatments are also quite expensive, CNS is not reimbursing a lot on those, and DKV Luxembourg is basically reimbursing 80% of the remaining costs. So at the end, this treatment for 5,256 euros only costs you 688 euros on your own. If you would have some serious medical issues, like for in this example, a brain tumor, and you would have to go to the hospital, a specialist clinic, private clinic abroad for 40 days, that would cost you around 16,000 euros. This would be reimbursed 100% by DKV Luxembourg. And on top of this, per day at the hospital, you will get an allowance of 20 euros per day to get food or whatever. And then Travel Plus, a very good example is a skiing accident. If you would have an accident on the slopes and you would get rescued by a helicopter and be flown to a private clinic into the skiing station and coming back by ambulance to Luxembourg, all this would be covered by DKV Luxembourg. So at the end, the total cost would have been 14,000 euros, but all of this would be reimbursed by this insurance. Then an example for a couple aged 30 and 28 years old with 2 kids. They, for such insurance, they would have to pay around 205 euros per month. By deducting this on the tax return, they would save around 1,120 euros in taxes. So the net cost for this entire family, for this private healthcare, would be around 112 euros per month. Let's have a look at a few examples for this family. So it's a very common example, I would say. So the father is seeing an osteopath. He has to buy contact lenses, some medication. Mother is seeing a kinesiotherapist, needed a new crown, and the children went to a doctor and had to buy glasses. So total refund here would be 1,830 euros, and the total cost for that year after tax savings would only have been 1,344 euros. We talked about deductions. When we are talking about deductions, we also need to talk about the tax return itself. So basically on taxx.lu, as you may know, you can file a tax return online in the most easy way. You are guided through step-by-step forms. If you have questions, you can contact my team. And at the end of the process, you will get your tax return, the official tax form that you can file and send to tax administration. But you will also get an overview about how to save taxes in the future. If you have questions regarding your tax return or taxation in general, don't hesitate to contact my team on help@taxx.lu, so we can help you with those questions. And if you want to know how to save on taxes, or if you want to have a simulation for those life insurance or private healthcare that we just saw, book a free call with my tax optimization experts. Basically, in this free phone call, we will check your current tax situation. We will check what are the options you have to lower down your taxes. We will calculate exactly how much tax you could save, and we could also help you to subscribe those products in a very easy way. Thanks a lot for your attention. Next Friday, we have another webinar about a home savings plan, also a very good way to save on taxes in Luxembourg. I wish you a great day. Thanks for your attention.